Hey everybody, good morning. This chart's got my attention right here. Copper, Dr. Copper. We can get a move right like this and set that up. Like a 550 spread, debit spread. You probably get that for about $2,000, $25,000 points. And out to July, maybe. That would be a beautiful move right there. So you'd risk about $2,000 per spread. You'd make, potentially, if it pops up here, 12,500 per spread. Buy the 5, sell the 550 out to July. I like it. There's no stock for this. This is a futures thing. That is beautiful. I'm thinking about it. I was sitting here doing all the numbers for it. That's how I have them all right off the top of my head. You know, if you do it right this moment, it's probably going to cost you $2,500, roughly. If you wait for a little bit more dip, I bet you get it for $2,000. I like it. I like this potential right here. And to reaffirm why I like this, let me pull up something really quickly. Something's going on in the copper market. This is not, when I pull this up, this is not stocks. They wrote stocks, but it's like in stock, like stockpile right here. This is Chinese copper stockpile. Look at this drop off right here. Look at the draw. Biggest 1 week drop on record right here. If this continues, talk about short squeeze, kind of like cocoa and some other commodities have done recently. Coffee, cocoa. Talk about this happening in copper. This is Shanghai Futures Exchange deliverable stock. I like it. Anyway, if you have no idea how to trade that, don't trade it. Yeah, so what happened? GDP came in negative 2.5 is what happened this morning. If you've been looking at the markets, you're like, OMG, what the heck? Right here. Where'd it go? Somewhere right here. Yeah, right there. GDP sales, negative 2.5. Ouch. That's what happened. And then simultaneously, PCE came in spicy right here, 3.6. So inflation up, GDP down. Ouch. It's like the magic combo. Makes the S&P drop like 100 points. Look at where it turned out from. I mean, anybody surprised? Hey, Kimberly, my favorite subscriber. Yeah, futures did not like the negative 2.5 GDP. A negative 2.5 is a recession. I mean, two consecutive quarters of negative GDP. And for those of you who've been around, we went negative GDP back in 2022. And without government spending, we've been negative GDP. So we've kind of been in a recession. That's why everything's kind of been rough, it seems like, for the lower end. Higher end, still fine, but starting to pull back a little bit on premium goods. This little sucker, guess what? Guess what we did yesterday? So in the short term, matter of days. I mean, this took what? 1, 2, 3, 4, 5, 6 days to get up here. So over the next week, we'll probably do this. Can take it right back down. And we've been getting 1, 2, 3, 4, 5, 6. Now it could do a little dip and a little bit higher. I mean, we could always do a little dip and a little pop like we did back here in January. Could do that again, get a little bit higher, but probably going to go right back down. This one took a while. Could go fast, could go slow. Be cautious. We've set up for a potential pullback. Alrighty. All trading involves a substantial risk of loss. Past performance not necessarily indicative of future results. This presentation is intended to be informational, educational, fun, and entertaining, not a recommendation to be buying or selling any financial instruments, including stocks, options, bonds, forex, futures, cryptos, treasuries. Don't long them, don't short them, don't trade them. You may lose money doing this thing we do called trading. What does that mean? It means I make some predictions, like the copper thing. I make some predictions. Sometimes, based on my history, sometimes they come true. Sometimes I get lucky. I did not put on that copper trade yet. Now, sometimes I don't. And maybe I never get another prediction right again, which that'd be lame, but it's possible. And there's a substantial risk that whenever you put your money at risk in the market can giveth or the market can taketh away. The market can remain irrational way longer than you can remain solvent in any position. The market has the most money. And if you need somebody just to tell you what buttons to push, you gotta hire and consult a financial advisor that can tell you what buttons to push. That's not me. I don't know your financial situation. I'm just a guy that makes some trades, and sometimes I get lucky. I show it on YouTube. I post it publicly. Right here, you can see my all-time on this account, negative. That's about to flip really positive. The last month, the last 3 months, the last year, all positive. I grabbed an account that I had like a $500 and something loss in from back in COVID times. And oh, look at that. You can see some of the, I've actually got 2 shares of McDonald's. I got 2 shares of PGR. I've got some of the stuff I've been holding forever. I've got my, I think I have 2 shares of Mara I've had from like $5 or $6. I've got BBIG I bought back in COVID times. I think these 2 were promo stocks. Like when you got other people to sign up for Robinhood, they gave you free stocks. I think that's what those were. And then this guy threw a couple bucks in about, I don't know, 6 months ago. Of course, it's down. It's like, these are new trades right here. And it doesn't show any of the short trades. There are 5 short trades. One on NVO. One on MCD. One on KHC. One on Celsius. And one on DAL. I sold puts under current price action on all 5 of these for May 2, which is Friday. Coming in hot. So, anyway. Welcome to the show, everybody. This is my challenge account. I am going to build an account. This account that's on Robinhood. Right now, this number says 513. That represents 1 week of trades. I'm going to make it so that this number right here, when you click the 1 month, it says $50,000. When you click the 3 month, it will say $150,000. And when you click the 1 year, we'll get there, but it'll say like $600,000. That is the goal. $50,000 a month. So when I say a $50,000 challenge, it's $50,000 a month. Right there. Not lifetime gain, not all-time gain, per month. It's going to be a slog. It's going to take some time. So, if you want to follow along, links in the description down below. I'll throw the link on here. Oh, I missed the Y. There we go. Throw it there. There you go. So what's the best play today? Let's dive in, take a look, see what we got, see what's shaking. Well, feels like a big move, but you look at the last several days, it's like a tiny, not a very big candle. I mean, you zoom it up like this, that's a giant candle. You zoom it out like this, we just are coming down to that hourly roadmap line. Remember yesterday I said we might go visit that before we can pop well into the red zone, but we did scrape the bottom of the red zone yesterday, especially on S&P. The cash index, we got well into the red zone. We're going to open up back down here. On the way down. Not magic, everybody. Just math. Seems like an uncanny ability to predict where we got support resistance, but for anybody following along, I've been working on this for quite a while. That where are we gonna potentially turn down from? The red zone. Now, the nature of how the next few days shake out, I kind of expect us to bounce back up in here, get a little bit higher. So we're gonna have volatility and chop for a couple days. That's maybe even a couple weeks. We got to work through this. I don't think we hit the top. I don't think we're dropping out right now. I think it's just today's surprise. Now, coming up after the close today, we do have our old pal, Meta, reporting earnings. Highly likely, unless we just do this today, highly likely we get a retrace down here before we can pop up to the resistance up here, and then this resistance up here. And if we break down, if we get a move down here, we're probably going down into this orange box. Pretty simple. Microsoft. That's a pretty clear resistance. This may need to retrace back down here again before we can pop up in there. Both those reporting earnings today. Tomorrow, after the close, we get Apple, which Apple's grinding higher. Like, if this gets above This gets above here. This is pushing on up. This is looking pretty positive. Look at that. Apple hanging in here. Not really reacting to any negative anything today. Amazon potentially taking a trip down. Deeper into the target zone. Here's the line in the sand. If we get below that, we're probably coming on in here. We may just retest the downtrend of highs. Nvidia, downtrend of highs. And this one rejecting off the downtrend of highs that we've got sitting here. Built in a new lower downtrend of highs underneath the roadmap line. If we break down below this low, probably going down here to the 70s. If we can break up, we've got that resistance, that resistance, that resistance. We've got a lot of things built on top of us. Or Nvidia. Google still working on its retrace. Absolute crushing earnings, guiding higher, pulling back. Just kind of shows you like the news, that earnings, that all that stuff has nothing to do with short-term trading reactions. Nothing whatsoever. Like, oh, the market expected. They made like ridiculous all-time high numbers of money and surprised by $1 billion. We made $1 billion more dollars than you even thought we made. And nothing but pullback. Probably going to retest here before we can pop up here. Tesla rejecting off the roadmap line yet again for the second time in a row. Rejected 2 days ago. Yesterday we closed back in here. Today we're back down here again. Watch out. If we can pop up here and close above, this will probably rally on up here for the next resistance. Once we get up to 380, we may retest 300 again before we can push on out. Looking at other stuff that matters. NASDAQ glancing off the box. This is the futures for NASDAQ. If you've never seen this before, in Q1 exclamation point on TradingView. If you are in a normal brokerage, it's probably //ES. That'll get you there. And short term, set up a reversal. Longer duration, we'll probably get a retrace before we can push higher. Stocks above their 50-day. This is stocks above their 20-day. So we've got over 80% of the S&P 500 stocks popped up. They went from being below their 20-day to being above their 20-day. That's the market tipped the boat. We went from negative to positive. We do that very quickly usually. And now now that we're all tipped to one way, probably tip the boat back to the other way. When you look at bigger picture, longer term, 50-day, we're still hanging out with 40% above, and that makes 60%, 61% below their 50-day moving average. We tipped the boat extreme, almost all the way to zero. We're zero. I mean, we were almost to no S&P 500 stocks above their 50-day. This is probably going to go back up to the top. Longer term, 200-day, we tipped that boat all the way down where we had 85% of S&P 500 stocks below their 200-day. We went from being up here, we were hanging up here for a year, and then we ripped it down. We are likely to take this back to the top over the coming, this can take a year, 1 to 2 years to get back up here. We're likely to see it back at the top. We don't typically just stay at the bottom or stay at the top. Giant market oscillators, different time frames. So even if we get a big down in the market, there's not a lot of energy. You know, you can look at this as energy, right? Short-term energy to go down. Medium-term energy to go up. Long-term energy to go up. At least back above their 200-day. So that's kind of how those all work. S&P, you know, ES 1/1 exclamation point. S&P 500 futures. Why look at the futures? Because they trade all night. Gives us price action. When you go look at the SPX cash index, there's missing data, just a big gap. Are we gonna... We hit the 30-minute on that one. Did we... Oh, we almost tagged the 1 hour. This may need to tag right here. And then we go up into the danger zone. I don't think this is the big down yet. That's it. I don't think this is the big correction we've been looking for. NASDAQ almost hit that 1 hour. Russell, on the other hand, on a different path. This one topped out back here in November. While the NASDAQ topped out in December and S&P topped out in like February. This thing's been down, 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 down. That was a 5-wave down. Probably get some sort of 3-wave up into this. So this may be the first move up off the lows here. We could top out somewhere in here as the S&P and NASDAQ get their correction off the danger zone. See this pull back. And then see this ramp on up into this zone, maybe out into the late summer, early fall. We might see ES and NQ hit all-time highs. And then we'll set up the big down. That's my primary expectation for the market out through the fall. Now we may set up something more sinister, more immediate term. Could be a much deeper crash scenario. But right now, that's not my primary expectation. We are already down to the target zone on oil. Look at that. Got there in the vicinity. I'd love to see 58.87 hit. If we get on down below 57, we're going on down to low 50s, maybe even 250 on oil. Target zone down here, right around 50. This is a key. I expect us to retrace. If we get continuation on down below 57, probably going on down here. A move down below 50 could kick off a hot war in the Middle East. GC. Watch for this one. I wish, golly, I'm going to have to move all these over by hand, I guess. I expect this to drop on down here. Then we do a 3-wave retrace back up here. And then we do this. That's what I'm expecting. Right now, we're just sitting. Not strongly bullish on gold right now. Bitcoin still sitting here under that 618 on the futures. The all-time history on the spot market sitting here under the 618. It's a significant resistance right here. We may need a trip back down to the roadmap line before we can bust out. That might be what we need. I am afraid that when we do this pullback, Ethereum will go below 1,000. Dollar sitting, just like everything, just like Bitcoin sitting at the 618. This one's sitting on top of the 618 and may need that right there. If we bounce, start breaking above the daily roadmap line, this thing's probably going to 130, 140, right up in here. That'll be a long-term high on the dollar. So we kind of already talked about Mag 7 stuff. Now I go pull gainers, everything moving $2 or more up in the pre-market, put it on the gainers list. Everything moving $2 or more down on the pre-market, put it on the decliners list, which the decliners list was large today, not this week, but today. There were like 140 tickers on the decliners list, I think. And then I also, lately, I've been grabbing my setups. Signature breakout pattern, which looks like almost all of those are down today. There were 31 of these set up yesterday at the close. Based on feedback, everybody kind of likes to go through some of these potential setups. So we'll go through a few of them, if not all of them, hunt for some opportunities. These may or may not have options. All right, I actually searched about 3,600 tickers for the setup. Bigger picture, that's the setup. Smaller picture, there's the high, here's the low, there's the potential entry, 160, 160. Target. You can see this is not the strongest ticker historically. If you have no idea what the statistics at the bottom mean, you should watch the last few. Go back and watch the last few weeks of this. I've been talking about the statistics and how they matter. That one set up an entry. Let's see. There's the high. Here's the low. Here's the entry. 29.43. We are 75% likely to go hit that. These statistics don't matter with one trade in the history. Doesn't matter. The historical across 56,000 trades is 75%. So when a particular ticker has less than 30 trades, these numbers don't matter. All right, now there's some other things it gets to be some nuance in that, but what this means, when these numbers are when that number of trades is less than 30, which is less than a statistical population, then we have to lean back on the bigger test across thousands and thousands of tickers and thousands of, tens of thousands of trades, almost 60,000 trades. That win rate is the profit factor, 1.28, and the win rate, 75%. So 75% of the time when we set up the close above the 618, after bouncing off the roadmap line. So we set up the conservative entry right there. That's what that blue arrow means. The targets, 75% of the time, we will hit that number right there. 25% of the time, we will go hit $1 below the low. So right now, right around 21 is the stop. Expecting that right there. 70% of the time, we can hit the 1272. You're like, well, it seems like a really bullish thing. Now, here's where it gets a little nutty. While this number is 70% likely to get hit, that means 30% of the time we would fail before we got there. This number, that level, 1.618, drops down to 35%. So 35% of the time, we can go from here all the way up here. That's not the greatest. I would rather go with the conservative 75% likely. So going for the big moves doesn't necessarily pay. When I talk about a high probability move, 75% of the time, baby. That's my high probability move. We get the activation right there, and we target right there. Dude, that's my signature breakout pattern right there. So, other ones. BFAM. Got the high, we got the low, we got the entry, we got the target at 134.15. 13 trades, 92. This one, now think about it. If the next 17 trades to get up to 30 were all losers, it would basically pull this down to like 40% profitable. So these don't matter. Like, it looks pretty good, but these don't matter. So when that number right there is below 30, those don't matter. So 70, we're back to 75% and 1.28. Now, what do they mean when you see big numbers like that? It means this stock does trend compared to one that chops. So this tends to trend, and that would be the target, 134.15. CINF. Now, this one does have more than 30 trades, and funny enough, comes in right at 75. And the profit factor, this one means it is choppy. The losses eat up the wins. So for every dollar that you lose, you only make 89 cents back. That's a net losing proposition. So 1 to 1, if you see a profit factor 1.0, that means you just churn your money. You lose a dollar, you make a dollar. You lose a dollar, you make a dollar. You make no progress. All right, this one is 2 steps back, 1 step forward. You actually come out behind. And this is statistically significant. So I would skip this trade. I just would. There's the potential entry and 154 target. CPS. Child Protective Service. Cooper Standard. Child Protective Services. And there's the high. Here's the low. Here's the entry. And 1880. And these don't matter. CRH. Remove those. Here's the high. Here's the low. Oh, missed. And be like, well, that doesn't look like an entry. It picked up the tool I have that finds these, picked up that one right there. Target at 103. But really the pattern is up to here and it hasn't activated yet. We need to close back above this area right here to activate the bigger targets. This smaller high to low could work out at that 103 target and then activate this bigger trade to 116. Docs. There's the high, here's the low, there's the entry, 94, and you can see this one with 4 trades left. It's looking like 4 trades could all be winners and push this back to 75, but unless they're really good winners, this is going to be negative when we get to 30. I'd skip it. I'm looking for the best of the best entries. Like I look at myself as like a retired trader, only coming out of retirement for the best of the best opportunities to make money. And this one, probably not it either. That was the activation here. You know, we did gap down. So there's your lower risk, bigger reward, upside potential, 58. These numbers don't mean anything. We're looking at 75% win rates historically. And a profit factor 1.28. FENC. And there's the high. Here's the low. Activated. And 741. This is under $10. So be careful. Things that are under $10. And also, you know, this is 2 of the things out of 4 things that don't always follow patterns. Biotech pharma. That's a danger. You know, biotech pharma. Stuff under $10, also a danger zone. The 2 other things, leverage products, that's also a danger, and Chinese stuff like China stocks, U.S. listed China stocks. Those are also a danger zone for me. FISI. Right there. Interesting how I picked that up. So the Python script picked up that high right there. Trading View says no. I don't like it. 31 would be the target if we get the close above the 26 area. FTI. Ooh, guess been drawing some fib lines on that one. And here's the high, here's the low. That barely triggered it right there. It's probably my volatility filter in TradingView probably filtered this out. I haven't recreated that in Python. Python, I want to see all the potentials, and in TradingView, I just want the best of the best. That activated right there for potential 34 on the upside. This one, 21. So these numbers don't matter. We're looking at 75 and 1.28. HWN. That one looks really nice, actually. 44.26. This one has a history of not winning so much. Probably wouldn't take it. The pattern looks nice, but the numbers look bad. This is a statistical population. This comes in below the average when you look at the 56,000 trades I have. So not good. And this is a net loser. Not good. I wouldn't want to put my money at risk. Honeywell. I'm sure Python found this one. Looking for that 223. I would wait till we got the close above this consolidation and probably the gap down right there. Gap down. I'd want this to close above here to set up the bigger upside. Target at 250. ICE. When you trade options and you get your transaction happens through ICE, this is ICE. And 180.98 is the target right up there. 23 trades, 82, 2.8. This actually looks pretty good. Even if these next 7 trades were all losers, this would still be pretty darn. This would still be running pretty good. That's a reasonable one to get into. Reasonable. IEF. There's the high, there's the low, there's the entry, 98 targets. Not the best numbers down here, and they don't mean anything. We've got the high, got the low, we've got the entry, we've got the target at 22.32, and the statistics don't matter. LH is the wrong ticker. We need US, and this is a medical involved. Caution is advised. This does have a statistical population. 30 trades in the history, slightly better than that one's good. This one comes in right at the average. So, And this one, better than 2. So we got 2 out of 3. If you wanted to take that one, nice potential for this to make money. 265 target. MA, MasterCard. I've been waiting for this one. As you can see, it was already drawn. This was on the market roadmap watch list for the week. 598 is the target. MDGL. Wow, that's choppy. Choppy. High, low. There's the entry potential 392.72. Be careful. Only 9 trades in the history, but it has been running really, like this one does tend to trend. And it won't fire off an entry here because it's already in the trade back here. It's already fired off back here. It's sitting here waiting for this. Missed the profit target from back here. Just missed it. So it's still sitting here waiting. It'll get out just before that target right there. Paramount. The chat's awful quiet. Hopefully some people are still here. 94. Not many. I guess talking trades. not what people want to see. There's your entry. There's your target. 1281. Right there. P Wood. So for those of you that love the trades, it's not what people want to see. Be looking for that. 36 on the upside. RDVT. Here's the high. Here's the low. There's the potential entry. Target 45 right there. SHW. Here's the high. Here's the low. And the software picked up that right there. The finder. But I would wait for close above the 336 area, looking for 412. This one, check this out though. Like if you wait for that entry, 41.83, that's like cha-check, cha-check, cha-check. I would set an alert on Sherwin-Williams right here. That is highly likely to trend on up into the target. THFF. Fired it off, 55. This one, and the profit factor is negative. Skip. THG. Here's the high, here's the low. Entry, target 179. Net loser, skip. UFCS. There's the high, there's the low. This actually picked up the secondary high-low inside there. That high, that low. 30 target up there. This is a statistical winner, but profit factor is a little light for my personal favorites. Vive. It picked up that high, that low. Entry right there, 253. This has been really choppy and sideways. Even though it's won a bunch of times in here, that would require a higher high. I would be very cautious on this one, getting my money involved in that. VPG's been in a downtrend. It can work, but that looks pretty gnarly. Gnarly, man. Target is 29.73, and then XLF. See the people, and it's kind of like people vote with their dollars, people vote with their eyeballs. People keep leaving the stream, so this is not interesting content for everybody. There's the target though, 54 on this one. This is historically right on the average. So 54 on the upside for XLF. If you wanted to play that, how long would you go for? If you don't want to run out of time for options, you would need 147 trading days, or about 212 calendar days. If you want to be 99% sure you don't run out of time, 212 days. How far is that out? Probably to September, I think. November. There. Maybe even December. Yeah. Late November, December. Where you have to be. Or just playing shares. You can put a few shares at risk. The upside, about 10% gain. There you go. Lots of stuff moving down today. Let's check a few things out. App loving. Yeah, I've been thinking that was going down. Looks like we're getting a reversal, maybe. Let's see what we got cooking here. Yeah, we're into the 1 hour. Turn that off. We have dipped into the 1 hour. So next up, 4 hour supports. If we're going to get continuation lower. Oh, we're already sitting there too. Interesting. So either we hold support here or we're breaking through. We're probably going to backtest and go lower. I don't expect that this is the pullback off of the 618 red zone, but it very well could develop into something deeper if we do that. Keep an eye on your smaller time frames. We're going to be well under the 5 minute. If we come back up and back test it from the bottom and don't break through, probably going on down. The 1 minute tells you when the trend might change. So watch for the 1 minute right there. Humana reported earnings today. Let's check it out. So we had some stuff reporting earnings, like Humana, Caterpillar, Vulcan, Western Digital, Generac, ADP. Let's check out some of those. Let's see what we got cooking. Humana. Yeah, I didn't expect that to go anywhere, being in this consolidation. Caterpillar. And the market's weighing on it. So 85% of the stuff will go the way the market goes, no matter what. Even if you had, they missed on top, missed on the bottom earnings. So when I talk about missing on top and bottom, top is earnings, bottom is revenue. Missed on both. They popped, but they're pushing down. Compare that to Google, that beat on top, beat on the bottom. It popped and is pushing down. So the market has, the market in general has more weight than any one bit of news. Vulcan Materials still grinding higher. Potentially going to close above the roadmap line. And we have the 618 up there around 266, 267. Get above that. Except the upside potential to rally on up to 310 for Vulcan. Vulcan looks pretty strong on the reversal there. Western Digital. And didn't do anything. That shows their earnings didn't come out. This is tomorrow. Somebody got something wrong, it looks like. Missed it by a day. Way to go, earnings whispers. GNRC. And just grinding lower. And IP, International Paper. Oh, look at that. Now it's back. Weird. So weird. And that one probably going to push lower. ADP. Trying to hold the roadmap line. If we get back below the roadmap line here, we're probably going to go lower. Be down here at 254. And HES. And hanging out the bottom. So stuff reporting earnings after the close today. This one, if we can get above here, we're going up here. If we reject off of here, watch for that right there. So downside 40, upside 70, 72. On hood, reports after the close today. QCOM. Also after the close today. That's a downtrend. Be careful. That's support. If we break below it, we're coming down here to 90. Let's see. GRBK. Green brick. Doesn't look like we're going anywhere. Pilgrim's Pride. That looks like it's going higher. 58, 56 target. Nally is a real estate investment trust, probably going more sideways. Prudential looks like we're going lower. And tomorrow morning, Lilly that looks like we're going to go up. Roblox rejecting off of the 618. Be careful here. This can easily drop back here. CVS. Yeah, that hit the, like, this last bounce, we hit the targets and retrace to the roadmap line would be the expectation here. MA has earnings tomorrow, so even though it's on the list, be careful here. Sirius XM. That looks bad. I just did a reverse split, so it's a dumpster fire. Be careful. Tomorrow morning, MCD. I am long this one. I expect 330. Not changing anything. In fact, I have short puts sold at 305, expecting this to pop. It may drop, but I'll take the shares and ride it back up. BAX. That's going down. Shake Shack. Well, we're at the target. Has the potential to reverse here. Setting up a head and shoulders. We can set that up. Potential for this to rally back up. Something like that. Nice upside potential. Yeah. I like it. I like it. I like it. And Walker dump. WDC. Still looks like bad. There's the earnings. That's funny. The ticker written on the other thing says WD. Western Digital Corporation. Still bad. Still expect that on Western Digital. There you go. WDC. There we go. And where did my... There it goes. And next up, Builder's First Source. Come on. BLDR. And that doesn't look good. Potential to find support here, but first move down, retrace. Potential to come on down. Before we get the big bounce. Now if we can bounce here, 101. Maybe up to 230 after that. There you go. All right, everybody. That's kind of what we got shaking. As far as what's moving, opportunity today, expectation today. What do we gotta watch? We gotta watch this like 1 hour roadmap line here. We hit, if we can hold it, going on higher. The bigger 618 is still up at 5610. 50, I guess 5650 on this chart. 50, 56, 50, and 57.10. There, so that's kind of the expectation. I expect a bounce here. Like you could maybe do a credit spread down here. I know some people love the credit spread stuff. Like they were asking me yesterday, like, JT, what do you think? So let's talk about it a little bit. You could probably do see what we got. 0 day. Make sure I'm on the right series here. We're at a 543. You do 535, 530. Bet that'd work out. If you want to do a 0 day credit spread, if you wanted something a little closer, a little spicier, do a 540, 535. That's almost worth $1.90. Of course, you could get in trouble if we fail, but I think we're going to bounce. I'd probably play it safer. 535, 530. All right. Be careful out there. You count your save, maybe your own. If if you're not sure, paper trade it. Be careful. You can lose money. The risk on that's like $5. Make 30 cents, risk $5. You can lose substantial amounts of money. So be careful. Be careful, be careful. I like the potential though. Looks like we could bounce. Although this is not showing any signs of bouncing yet. So you may want to wait till it quits dropping before you do that. Have a great day, everybody. We'll see you again tomorrow. Same bad time, same bad channel. 9:15 tomorrow.